Good evening to everyone, I'm Christos and today we'll explore together why America is the best investment choice. Christos, America is at risk. The BRICS are rising, inflation has skyrocketed, the dollar is collapsing. I didn't even get to finish my sentence. Hey, are you guys serious? America has gone through and overcome far worse crises. Stop falling for the doomsday narrative. Do you know how many views I'd get if I went out and said the same things? Do you know how easy it is to play on your fears? Not just me, all the influencers. That's why we're called influencers. The hard part is being boring, over and over again. Saying simply, in the long run, it'll rise. Don't fuss over the markets, invest as much money as you can in the VUAA every month, and in 20 years you'll thank yourself. Yes, but this time it's different. Let's delve into it together in detail. Before we move forward, if my videos have helped you to get your finances in order and you want to start investing successfully, you can set up your investing account via the links in the description. This way, you can make sure that you're using a reliable platform and you'll be also supporting this channel directly without any expenses. Plus, don't forget to give this video a like and leave a comment. It really helps out with the YouTube algorithm. Of course, if you haven't done it already, subscribe to the channel and hit the bell icon to be notified when I upload videos. In order to be on the same page, let's get the standard disclaimer out of the way. I am not an investment or legal advisor. All opinions expressed in this video and on this channel in general are solely my own. They are meant to entertain you. Do not take investment or legal advice from a person on the internet. Always do your own research. So today, we'll go back in time and explore the incredible journey of the S&P 500. Primarily, we'll focus on how it has behaved during some of the most significant crises of recent decades. And we're talking about real crises, no jokes. Honestly, every time I see what this index has gone through and overcome, I wonder if most people have any idea how very resilient it is. Seriously, from the beginning of its history, which marks 100 years this year, it has faced so many blows and it just kept rising and rising and rising, and it will continue to do so because humanity as a whole will continue to evolve. It always has and always will. This index is destined to always rise. Consider the past 40 years. Every 3 or so years, someone could proclaim the end of America and the S&P 500. Yet, it kept climbing. The reason lies in its structure. At any given time, the S&P 500 includes the 500 best American companies, and it's unbiased. If a stock doesn't meet the criteria, it's removed from the list and replaced. Although it has faced many crises, unfortunately, we can't cover them all as it would require a 2-hour video. But let's look at the crises of its most recent history, which most of us here probably remember to some extent, the recession of 1990. The 1990 recession was relatively mild and short-lived, from July of 1990 to March of 1991. It came right after another downturn, the savings and loan collapse of the mid-80s and the significant rate hikes by the FED in the late 80s. What triggered it? The invasion of Iraq into Kuwait in the summer of 1990. Does that remind you of anything? Yes, we could liken it to Russia's invasion of Ukraine, but I think the situations were and are quite different. Of course, all this resulted in the S&P 500 experiencing a drop of about 20.5%, from which it took roughly 8 months to recover. Ouch, that seems like a lot, doesn't it? To remind you, investors panicked, firms shut down, people went bankrupt, and fortunes were lost. Why? Because they didn't think long term. To see the bigger picture, that's it. The tiny blip. It's barely noticeable now. That's how compounding works. In 30 years from today, even these blips won't be visible. Let's look at them anyway. The dot-com bubble. Fast forward to the late 90s, a time of unprecedented technological advancement and rampant market optimism. I think there's not much to say here. We all know what happened. The frenzy around dot-com companies was in full swing, and any company claiming to have an online presence was valued astronomically. If you recall, we recently compared the dot-com mania to the AI craze we've been experiencing lately. Yet, by the early 2000s, reality set in and the bubble burst. What else was expected? This led to a significant market crash. But here's the noteworthy part. Despite the collapse, the S&P 500 not only rebounded but continued to reach new highs a few years later. Those who stayed invested and believed in the market's long-term potential reaped substantial rewards, and they continue to do so. The dot-com bubble caused the S&P 500 to decline by nearly 50%, from which it took 7 years to recover. But in the end, it did. While it seemed like a disastrous turn then, today, it's just a blip on an otherwise upward graph. Yes, but look how many years it took to rise again, some might argue. Yes, but all those years you were buying on sale, my friend, I'd counter. What the Did you invest everything at once and then had no money left to invest further? Even if you put everything at the top, you'd still be behind 10 years later. And in between, whatever you'd continue to invest would see dramatic returns, even up to 100% in 4.5 years. What are we saying? Are we kidding ourselves? The housing crisis of 2007, just as investors of that era began to rejoice, one of the most severe economic crises in recent history hit, the housing crisis of 2007. The collapse of the subprime mortgage market sent shockwaves through the entire global economy, causing the S&P 500 to plummet. Yet, once again, the S&P 500 showcased its resilience. Over time, it rebounded and soared higher than ever before. If this isn't proof of the power of long-term investing, then tell me what is. Specifically, the crisis of 2007 pushed the index 56% lower, and it took about 6 years to return to pre-crisis levels. Once again, in the grand scheme of things, it's a mere blip. If it was anything, it was an opportunity for even more discounted purchases, a chance for more gains. The COVID crisis, since the market recovered from the 2007 crisis, the S&P 500 experienced a crazy bull run, which was halted by the COVID pandemic. The pandemic wreaked havoc on economies around the world, and stock markets experienced a rather sharp drop, causing widespread panic. But the S&P wasn't phased. Once again, it demonstrated its ability to bounce back from any crisis and continue stronger. During the COVID crisis, the downturn may have approached 35%, but it took just half a year to recover. And that was the part that took most by surprise. All that was needed was to dispel the fear. In the bigger picture, just a blip. From that point on, the S&P 500 kept hitting new record highs. And about a year ago, we saw a decline of up to 27%, which started in early 2022 and bottomed out in October of 2022. We're left to see how long it will take to fully recover and continue its upward trajectory. Once again, look at the big picture. From all this, there's a very valuable lesson to retain. Markets over the span of decades always trend upwards. They may have hiccups, opportunities to buy stocks even cheaper, but in the long run, they always rise. Yes, past performances don't guarantee future results. They are the primary indicators we have. Every day we drive to our job and we don't crash. We don't know if we'll crash tomorrow, but we'll take the car to go to our work, because the alternative is to be jobless. Throughout history, the S&P 500 has shown its remarkable ability to recover, even from the most severe downturns. No matter what the index has faced, it steadily recovers and reaches new all-time highs every time. That's why I keep advocating for DCA in VUAA. By investing as much money as we can every month, regardless of market conditions, we benefit from both its declines and its rises. When markets fall, we rejoice because it's our chance to buy more on sale. Join our Telegram group to see how we celebrate during the dips. It's impressive. Meanwhile, we also celebrate the rises, win-win. So I'll say it again. We save and invest as much money as we can every month in the ETF VUAA, which also tracks the S&P 500, meaning the 500 largest American companies, and its UCITs, which means it's 100% tax-free. And it automatically reinvests dividends, meaning we don't have to do anything at all. And of course, it's available on Freedom 24, which is also the sponsor of today's video. For those who want to see step-by-step how we invest in VUAA, the process is incredibly simple. Register on Freedom 24 through the link in the description for 1 free stock. Go to the web terminal, type in VUAA, click buy, and just like that, you have it. And one last thing before we wrap up, I want you to remember something very important. Investing isn't a sprint, it's a marathon. As always, if my videos have helped you to get your finances in order and you want to start investing successfully, you can create your investment account through the links you will find in the description. This way you are sure that you are using a reliable platform and actively supporting this channel for free. Thank you so much for watching this video. I hope it helped, and I'll see you in the next one.